when you're young, I'm talking about people who start their career. So they don't have a family at that time. So in your early 20s or even late 20s, if you have to put in some extra hours, you go through the grilling at the initial start of your career, of your life, then you're taken care for the rest of your life. I don't think the youth should be pulling their hands out from hard working at the initial start of their career, because I think that's when you can really put in extra hours. The age is on your side, the energy is on your side. In late 40s and 50s, that's not the place you want to be. You want to be at a place where you can take care of people, you can manage people.
Today's guest brings over 22 years of high-stakes financial leadership across the GCC and the banking world. He's looked after finance and operations in some of the world's most renowned institutions. He's seen capital markets, investment banking, and corporate banking, giving him a unique all-around perspective. Sathyanath Shanbag, welcome to the podcast.
Thanks a lot.
22 years in the finance institution. Aren't you bored sometimes?
Not really, although I started my career not from finance. I mean, I was in the finance department, but started from asset management, then telecommunications, so on and so forth. But yeah, banking industry is something which always lured me, so I was always keen on working on this. And I think the banking industry itself is so dynamic that it always keeps you on your toes. So yeah, I was never bored in this industry.
Have you ever thought of maybe changing careers?
Not really. There are a few times when I wanted to switch jobs, and when I looked out for a job, I got an opportunity again in a bank. Different banks work in different styles. So as long as you are moving, you're switching jobs if you get ever bored. So I think that will always keep you on your toes, and it'll always keep your job interesting.
And I think banks in general, like you said, have a very different kind of perspective. Were there moments in your overall career that you thought that this is the field for me? I want to be here for more decades and even longer time.
See, I when I was in college, that point of time, I'm talking about around 30 years ago, and in India, I'm talking about in 1990s, banking job was one of the most sought after job. So when I started my career in the commerce section, in the finance section, as education wise, that was a job that I always wanted, because that was the most respectful job in India. Everyone wanted to be a banker. Need not necessarily be in the finance department, but say in the sales side or in the compliance or risk or whatever. But banking job is what the most respectful job was. So yeah, I was always keen on working in a bank. So initially, when I started looking out for job, I didn't get in finance department. So I worked in the big companies like Tata, Reliance, but I always wanted to join a banking industry. And UAE is the country which gave me the first break in a bank, and since then I've been in the banking industry itself.
Nowadays, when I think that the sought after jobs are probably you see in the US or UK investment banking,
Yeah,
big
yeah.
bulge bracket where you make the most amount of money, you take risks, and you help clients grow their portfolio. What do you think that has been like in terms of growth?
In my 22 years, the job which I really enjoyed a lot is banking, but that's more of investment banking. So I was in the finance department of an investment banking company. I joined there it was a startup, so I joined as a fourth employee, and I grew along with that company. That company is still there, but after 7 8 years, I thought I should switch to a proper commercial bank. Having said that, I have a few my nephew, my nieces who have done chartered accountancy or CPA, ACA. And when they ask me which industry should I join, I always tell them financial services. But I have a few little inclination towards investment banking. Although I tell them that they can either join the finance department or on the sales side, investment banking side, client side. But yeah, I think investment banking is quite dynamic. You learn a lot over there. I think in the financial services, investment banking is really doing good. And in future, with all the mergers, acquisitions, and takeovers that's happen, I think investment banking is really the place to be.
So financial services, you mentioned about M&A as well. These are very demanding roles in the sense, even in terms of timing, because it's a client-facing role. A
Yeah.
lot of weekends are involved, a lot of weekdays, long hours, especially when you're starting out in your career. Would you still give that same advice to people starting out?
Yeah, I advised few of my friends and nephews, as I said, and I told them that it will be very demanding. You'll have to put in 10 to 12 hours at least in a day, and you have to forget your weekends. So they are working in the in one of them is working in investment banking company, and one of my friend is working in the big four companies on the investment banking department. They have long weekends. They have long hours during the weekdays and
And no
also on the
weekends.
weekends. Yeah.
Yeah.
Um, Sometimes they call me. They said, "You have put me through this," but they thank me as well when they see that their career is on the right path, and they are acknowledged, or their effort is acknowledged in a very nice way financially, as compared to any commercial bank or any non-financial services industry. Investment banking is where you can grow your career. You grow in leaps and bounds, and it financially it appreciates really really well.
And I think that kind of rigor that it puts someone through day in and day out, they're able to handle anything after this,
Yeah,
right?
when
Because
you're young, I mean, I'm talking about people who start their family, start their career. Sorry, so they don't have a family at that time. So in your early 20s or even late 20s, if you have to put in some extra hours, you go through the grilling at the initial start of your career of your life, then you're taken care for the rest of your life. I don't think the youth should be pulling their hands out from hard working at the initial start of their career, because I think that's when you can really put in extra hours. The age is on your side, the energy is on your side. In late 40s and 50s, that's not the place you want to be. You want to be at a place where you can take care of people. I mean, you can manage people, but the work is done by those people who are reporting to you. But yeah, the extra hours, the long weekends is where you put it during your youth.
so what happens now when you see a lot of TV shows, you read reports, is everyone is now talking about work-life balance. And there's this whole set of generation now, the millennial generation, even the generation that we're in, that focuses on ensuring a life in the weekend to relax, to take it easy, and not so much emphasis on extra working hours. Now, you mentioned in the beginning that to grow in your career, at least till in your late 20s, your early 30s, it's very important to put in that effort. So, how do you reconcile those two thoughts of you?
See, I myself spent a lot of time. I joined the investment banking company which I was talking about when I was 26. I used to work 6 days a week, and I used to start my day at 8 and end at around 10:30.
The 14-hour days, yeah.
14 hours. And I used to work 6 days a week. And I had my wife at that, I mean, I still have my wife, but that time she had just delivered our first child. So, but yes, did put extra hours. And that time I used to give a less time to my family. But I think that point of time, even your partner will understand, whether your wife or your husband, he or she will definitely understand that the initial part of your career, you have to put that extra hours, both of them. So, and that will really boost your career. You have to strike a balance. In my 30s or in my late 30s or early 40s, I used to leave office on time. I used to spend time with my family. You have to be part of your family as well. But you can't have that balance right from day one. At initially you have to have an inclination towards your career or towards your family. If you have the inclination towards your family, then you can expect your career to go on a
Staggered pace.
standard pace. Yeah, but if you want the inertia in your career, the initial boost in your career, you have to put that extra hours. And as I said, in the initial years, you have that energy and that the adrenaline in you.
That stamina as well,
Yeah,
yeah.
yeah, you can put that extra hours, and you can still, after putting 12 hours for 14 hours in a day, next day you can still come at 8 o'clock and work with the same energy.
I'm just thinking of that visual in which, you're working in the start of your banking career, your wife had just delivered, and obviously you're spending less time in the beginning with your newborn, your
Yeah.
child. How has that experience been like when you've prioritized at that particular time, your career over your family for a period of a few years? Do you now feel that those moments, those special moments, that, it's something that maybe you could have spent more time, or were you happy with your decision?
I am happy with my decision, and I thank my wife for supporting me during that time, because had I not done that, and have had left my office on time and come home and spend my lot of time with my infant child that time, yes, I would have had those sweet memories. I still have, but as I said, you have to strike a balance and have to give little inclination towards your career if you want to have that initial boost. And she supported well. She really supported well, and she took a back seat. She left her job and she became a homemaker, and she took care of her child. I mean, it's not that you don't spend time at all. So you have to be a little political or something. So my wife wants to ensure that she puts my our daughter to bed in the afternoon, so then she can sleep late. When I come home, I can spend some time with her. that way, because the child didn't have school and play school or all those things. So even if my daughter used to sleep late, I used to come home and spend time with them. So that way I used to spend a lot of time in office because I joined it as a startup. I was the fourth employee in the investment banking company, and there was no help. So I was the only person in the finance department, and I had to do everything, right from accounting to reporting to reconciliation,
You built everything from
build
scratch.
everything. And from no staff, we went up to 11 staff in my department. So from I was the fourth employee, we went up to 150 staff in the span of 2 years. So the initial 1.5 year, because it was a startup, you had to set up a lot of things. So, and my wife understood that. So, and she said, you do what you feel right for your company, for your career, and I'm there to take care of the child. So yeah, so that really helps you. Obviously, I can't take away that support from her, and because she supported me, I was there. So yeah, you need to have an understanding partner as well to have that.
That's true. And I think many of us forget the importance of having a balanced partnership. And it's
Yeah.
so important to have the support of each other to go with this journey ahead. You mentioned about a startup, and obviously the pace is quite quick. What do you think is very essential for a finance function or a finance department to do well in a startup environment?
See, in a startup environment, finance is the only control function, because in the startup you don't have an internal audit set up. Initially, it's only when you have a 2 3 years history and then you start growing slowly, you set up the internal audit function. So finance is the main control function. So it's very important in a startup. You tend in a startup. I'm talking about an investment banking, not a bank, because bank usually have all the systems, everything put in place.
Regulations,
Yeah,
yeah.
regulation, everything put in place. So for investment banking, it's just quite new. There was no systems. Initially, for first 6 months, there was no systems at all. So everything was in an Excel sheet. Then you get the systems. There are also systems which are not tried and tested. You get it just off the shelf from the market, which can take
Mm.
care of your system, of your record, of your bookkeeping for 1 or 2 years. Then you expect the bank to grow, to spend some a lot of money and get a more robust software to take care of all the reporting. So initially, when everything is in manual or a system which is not that robust, the finance control function has to play a very important part, because you have to ensure that everything is in place, the transactions are recorded on time, it's reconciled on time. Slight lapse on the control function, you end up having some errors or frauds which doesn't go which goes unnoticed. You can't
Mm.
track it, because in a startup you don't have a lot of employees, so this initial staff have to spend a lot of time. So yeah, you needed that effort. But there's a different thrill working in a startup. You give your sweat, your blood to that startup company, and you realize when that company is growing, you
Mm.
realize it's because you and your
You've
fellow
put that
colleagues who have
effort,
put that
yeah.
effort, that's it's growing. When you join a company which is already established, it's like a pin in a haystack kind of a thing. And you're working in a big bank, but in a startup it's a different thing. You see that company growing along with you.
And
So
you have a wider set of responsibilities and focus also
yeah.
within you. You mentioned about fraud, and we see so many reports nowadays about the increase of fraud, identity issues as well. What do you think are some practical ways that companies and banks can kind of mitigate and prevent this?
See, internal controls have to be there in any industry, even in banking industry. There are few things which are definitely needed to be put in any organization, including banks. Segregation of duties, that's one important thing. That no one person does all the job. There has to be one job which is shared by, and done by at least 2 3 people. Even bookkeeping, there has to be a maker checker.
Mm.
There has to be any payment. There has to be 3 layers of approvals:
Authorizer, approver, yeah.
maker, checker, and then authorizer. And there has to, like, the authorization hierarchy, you should be there. Um, there has to be dual control, even in physical access control. There has to be proper dual control in regards to that. There has to be reconciliation of all the
Accounts.
Nostro and Vostro accounts of securities. And internal audit and compliance is one of the important control functions. So internal audit is the function which controls the internal control. It
Mm.
checks the internal controls, and if there is any lapse, it's reported to the internal audit committee or the management. So yeah, so these things has to be there. All the internal controls has to be put in place.
Got it. That's from a finance point of view. If we talk about the business of banking, in very simple words, how does a bank operate and thrive? If you had to explain it in very simple words.
So a bank primarily functions with a margin on any transaction. So when it's interest, so they have a margin on the interest income. So that they so bank doesn't have necessarily a product which they manufacture or sell. It's basically services. So they provide services and they put a margin on that. So when it comes to interest income, there is a margin. So they borrow money and they lend you money. So they keep a difference between the borrowing rate and the rate at which they are giving. So that's where they make the profit. They also make profit where they borrow short term and lend long term. But they also have to maintain the liquidity, which is put in by the regulators, the liquidity ratios and all those things. They follow that, but this is where the entire game plan is that they borrow money and they lend it at a higher margin, or they borrow short and lend it at a long term. So this is where they make profit. Obviously, the cost structure is there. They have to maintain the cost efficiency. There are banks. Recently, there are many banks who have failed. That's because they either don't introduce new products and they kind of fail in the race, or the cost is where that kicks in. That the setting up of their cost, the day to day running cost is so high that the revenue which they are generating is not able to match that. There was a bank in UAE which started in 2004 or 2005. I won't take the name. It was a foreign bank, and it initially failed because it couldn't introduce new products as the other established banks were doing, and their cost kept increasing because there was no revenue generated, and they failed and they closed down. Come 2009, 2010, they came again in a much bigger way. They acquired one entire building here, and they employed staff without having a proper product line. They employed a lot of people, and again, they couldn't generate revenue. And again, the cost kept increasing. The rents in UAE were very high, the salary cost, this and that. And they started booking losses, and they couldn't sustain. They could sustain for some time because it is a very well established bank coming from a foreign country. But after some time, they saw that UAE operations is not giving them a lot of revenue, so they closed again. So that's one revenue model for every bank, where I said that they earn income by keeping a margin on the services, but there's a cost factor as well. And there are many banks who fail either on the cost factor or not generating new products and keep being in line with other banks.
So, from what I understand, a bank makes its revenue from the spread difference between how much it charges, let's say for a business loan or a personal loan or an institution borrowing, versus how much they actually get the funds from.
Yeah.
And you said many banks fail because their cost structures are high and they don't introduce new products. So, other than a business or personal loan where they make money in terms of interest, are there other products that a bank can introduce beyond this? Because I would think you go to a bank, you deposit money, which is like a liability for a bank because they have to pay you back. You try to borrow money through a business. Is there anything else that a bank would have product wise?
See, primarily any bank works on an interest income. Now, the interest income can be many things, whereby so the bank has two aspects. One is the wholesale banking, one is the retail banking. Retail banking is where the individual comes in. Wholesale banking is where you lend it to corporates. So interest income is the main revenue. Now, interest income also can be from plain lending it to the banks, not to wholesale customers.
So interbank.
Interbanks. So you have the money market deposits where are you borrowing funds. There's money market loans as well where you lend it to banks. Then there are loans and advances to corporates. There's loans given to individuals. So all these have interest factors, but the interest factors come from different revenue streams. Then there are also investments. These days, the regulators have, last few years, around 10 years, you can say, the regulators have insisted on having a high quality liquid assets, whereby every bank is mandatorily required to invest in liquid bond investments. So that during crisis, this was after the Lehman Brothers crisis. So that during crisis, when your bank wants liquidity, they can sell these bonds, which are highly liquid, and every bank is expected to have particular number of bonds or amount
A
of bonds,
percentage, yeah.
percentage. So again, these bonds fetch you interest income. So there are interest income from different revenue streams, but interest income is the main revenue stream of any bank. Other than that, you have non-interest revenue as well, like fee from loans, fee from guarantees. But these are the primary ones. Now, product-wise, now every bank has different investment banking arm whereby they do investment banking deals, underwriting some investments, the syndicate loans, the syndication desk which creates that. Then there is wealth management division, whereby you have fee income generated based on the assets that they are managing, the wealth that they're managing on behalf of their clients. So there are many different revenue streams, but bank primarily always functions on the interest income.
So when you say a bank comes and it's not able to generate revenue, is it because it's come in the example that you gave or other examples? Let's say a customer would prefer their legacy banking partner, whether it's a local bank or international. Then is this why other banks struggle? Because they aren't able to attract customers to take loans from them or borrowings?
You see, what happens is when foreign company comes, foreign banks usually, if you see in the local market right now, the leaders are FAB, ENBD, ADCB. So these are Mashreq banks. So these are all the local banks who are well established. When a foreign bank comes, they have their legacy cost as well, and when they operate here, the tax that they have to pay is quite different than the other local banks that they have to pay. So there is an additional cost which they have to factor in, because of which their services are a bit expensive than the local banks. Now there are customers who always like to have businesses or deal with foreign banks. So there's a loyalty from those type of customers. But otherwise, for foreign banks, it's difficult because the costing is a bit different than the local banks that you're operating here. That's why these days the foreign banks like to function in free zones
Free
like
zones.
DIFC and ADGM.
ADGM, yeah.
Although they can't get involved in retail banking, but they can do the commercial deal with the commercial bank with corporates, and they can give in good rates because the tax structure is different. Free zones do not have tax until last year. If you're working onshore, you have 20% tax that you had to pay, but for offshore, there was no tax until last year when the corporate tax kicked in 2024.
So this corporate tax of 9%, you said it's same across businesses and banks as well, or are the rates different?
It's same across all industry. However, if you are a big multinational company, there are few pointers that if you have a particular billions worth of revenues, if you're a foreign bank and you're operating in different countries, then the pillar 2 kicks in, which is applicable from 2025. So 2025 is not over yet, but I know that FTA has given guidelines that the pillar 2 guidelines will kick in, whereby you have to account for 15%. But otherwise, it's 9% for everyone, unless until you're a multinational bank operating in different countries and there are revenue
The thresholds.
thresholds and also, yeah.
So we spoke about how banks make money through different interest incomes, through loan, interbanking. Now we talk about the cost structure, and you've said that certain banks have such high cost structures that they aren't able to match that with revenue, and eventually they close down. So, what are prudent advice that even big banks or corporates, when they're coming to the Middle East or any region around the world, is it that they should budget in advance? Because I would think if a bank comes in, they hire 20, 30 people, they do a rent of the building, and they pay for these expenses, they still go out of business, like you said, because they don't bring revenue. Is it that they haven't budgeted in time? What are some factors that they can do in advance to make their entry into the country more sustainable?
I think most banks do budget for everything, and I think the initial business plan that is drafted by their staff, I think they are much well aware of how the costing is and what factors go in. But I think the game plan is quite different when you come on field and operate that. Um, and having said that, there are still many foreign banks who are operating like HSBC, Standard Chartered Bank, and who have been working for a long time, and they have been doing great business. But yeah, the revenue models and the end line, the bottom line basically is you cannot match it with the local banks, because local banks, the customer base is huge, and as I said, the costing is quite different. So the foreign banks definitely do their study properly, and they do everything right until they come here. But eventually, what goes on in real life is quite different than what their business plan is. Your business plan can be accurate, but
It's volatility,
yeah,
the market
volatile, and the
changes.
real picture is quite different otherwise. So a simple that you might budget for the staff cost also.
So when we talk about the spread, the interest rates, for instance, let's say they budgeted for a business loan or a personal loan to give a particular rate, and they budgeted that they'd borrow this at a particular rate. What happens when rates fluctuate? Because based on the market, the conditions, the oil prices, what if the borrowing rate goes even higher than close to how much they're giving? Doesn't that kind of wash away all of the plans? How do banks then remain profitable?
See, usually the banks have a fixed margin, more or less. Not a fixed margin, but a margin which is in the similar range. So there might be many banks. Like I'm giving an example of a syndicate loan. So for syndicate loan, there is a $5 billion loan given to, say, one of the
Wealth
sovereign
funds.
wealth funds, say Saudi or UAE or anything. So there are like 15 different participants. Now these 15 different participants might more or less have the same margin. So they might be borrowing money, and they might be having a margin similar, more or less in the similar range, and then they lend it to this sovereign company, sovereign wealth fund. But what happens is it's on the borrowing side, you might be borrowing at a different rate. You might be borrowing short for 3 months and then borrowing on a regular basis to maintain that liquidity. The other bank might be borrowing it for 6 months. So that's where the game plan is, that it depends upon how your treasury is functioning, what your treasury's foresightedness is, that they want to go for 6 months loan or 3 months loan and keep borrowing regularly if they have a proper backing up from their head office, where the funds are easily available, whether the contingency funding plan is in place, whether borrowing is easily available, and if the Fed rates changes, as you mentioned, the borrowing and the borrowing rate might change, but as I mentioned, the margin rate is still more or less in the similar range. So the game plan for most of the banks is the same because the margin is the same, but it's the borrowing that they get from during such scenarios.
Okay. Also, Satya, money is a very personal thing. And when people decide where to put their money, they put it in a bank and they keep it in an FD or a high earning interest account. How do you think they decide which financial institution to put their money in? What factors do they look at?
See, for individuals, it's a bit difficult. For corporates, obviously, you have your risk department looking into all these things, and the finance department and the treasury department. So let me answer you for the individuals. For individuals, when you're investing in any bank or keeping a fixed deposit in any banks, you have to always do the KYC. You have to do the due diligence that whether this bank is stable. There is generally a trend of the deposit rates across the country that you're living in. So I'll take UAE. So if in UAE the deposit rate is 4% and across everyone is giving 3.8 to 3.9, if someone is giving 3.94%, I think that's stable. First of all, you have to do the due diligence of the bank, whether it's safe. Just go through the news, go through their financial statement, which is available on their website. And if they are giving in the similar range of other banks, then yes, it's safer. But if a bank is offering 5%, 5.5%, when other peers, other banks are offering 3.5, 4%, then 1% is the risk. That risk is the credit risk that you're running on that bank. I'll also give an example in India, where I come from. So there are many banks who, most of the banks are giving in the range of 6.5%
FD rates, yeah.
FD rates. But then there are some banks who are giving 9%, 8%. So that 2% is the risk that you're taking on that particular bank. You might not know whether you might get that funds back or not. Yes, there is a regulator who is taking care of all the regulations, and they're taking care of these banks that they will return the funds of the consumers. But you don't want to get into that hassle and that vicious circle whereby you have to do the running around or getting your funds back. So for individuals, always, if any bank is giving a much higher rate than the other banks, then there's the risk that you're paying for. I'm not saying that all banks will collapse or your funds will go, but if you're willing to lose, if you're willing to take that risk to lose that money, then yes, then 2% is worth it, 2 or 3% is worth it. If you're not, then you shouldn't invest, shouldn't keep it on deposit.
When we look at the reputation of a banking or financial institutions, and we see the emergence of sometimes digital frauds that take place with identity or calls, how do you think that affects the banks or a financial institution, and what can they do to mitigate this risk?
First of all, as far as how it affects the bank, there are two things. One is the reputation. So reputation is at stake, and when a big bank fails like this, even if it's local bank or foreign bank, when the news is out in the market and they come to know that this has happened with this bank, the consumers lose confidence in that bank. So yeah, that reputation risk is pretty high. That's the biggest risk. As far as financial risk is concerned, every bank has to account for provisions based on the IFRS guidelines and the new Basel guidelines. So there is a specific provisions where based on a specific client who is risky or not risky, you do some provisions and you make a provision in your balance sheet for the loss. Not necessarily it will happen, but you're just creating a provision that if things go wrong, then you already have accounted for that loss. So there's something called general provision. So based on your loan book, you create a general
A
provision.
percentage of the.
Yeah. So if such thing happens where there's some customers who are the bank, some customers have there's a fraud or something, and so the bank will already have taken care of those losses by creating a provision. So, but this is not the main thing. The main thing is a reputation risk, because once the news is out in the market, the consumers will lose confidence. The consumers will go to the other banks, and then the loss of business is much bigger than the loss that they have already taken care of in the P&L.
And it's a spiral effect, I guess, when the reputation loss is there, when customers start withdrawing their funds and move to another institution. I think it's going more and more. More customers will come, and the cycle keeps increasing
Yeah.
to the extent that the bank loses the deposits from its customers and another bank gets that function. Are there any awareness campaigns you think that a bank should do to the general public, or emails, or some kind of communication for this?
See, I've been hearing a lot of news on the radio and also on the social media, whereby the banks are making those awareness that, do not give your
Pin,
PIN, do not give your OTP to
OTP,
anyone. So I think banks are proactively doing all those things. But I have to also admit that the fraudsters are much, much more cunning,
advanced, yeah.
yeah, advanced or cunning. And, when banks come out with solution, they will go one step forward to do something. Um, I have a lot of friends who have gone through such frauds, scamsters who have scammed them and they have lost their money. Uh, there are many instances where banks have returned money, but some cases bank will not, because once you give OTP, there is a disclaimer already given by the bank that you're not supposed to give your OTP, you're not supposed to give your PIN.
To
If
anyone.
yeah, if you give your OTP and if you give your PIN and you lose money, then the bank has already given you a disclaimer, so the bank cannot be blamed. The bank cannot be held responsible, and that's why you have dual factors. You put your password in your mobile banking or your online banking, and after putting the password, after putting all the credit card details, the dates, the CVV, then still you get an OTP.
OTP message,
Yeah,
yeah.
so that's like a dual factor authorization which they have already done. So their banks are pretty these days are pretty careful, and they also advise and educate their consumers. So I think the banks are doing a good thing, and their banks are taking a lot of effort in doing this. But then still, if there are scams happening, then it's just the consumers have to be vigilant.
So essentially, what banks are saying, in addition to putting your passwords and pins, they send an SMS to give you an OTP. From there, and they've done their full responsibility. They've informed you of everything. If at the end of the day, you as a consumer give this personal information to someone else, then that is your responsibility. It's
Exactly.
nothing to
Yeah.
do with the
The
bank.
bank. Yeah.
Now we've seen, this emergence of digital banks where you're able to open an account in 2 to 3 days.
Yeah.
You have face verification, you scan a certain ID or your passport. I remember decades ago when you had to open a bank account, you had to actually visit the branch. You had to give all your documents, your property documents, or your rental agreements. And many banks required a reference
Yeah.
that
Yeah.
we won't
True.
open your account, especially in smaller towns in other countries, that the branch manager would say, I need to know a friend
Who's already having an
who's
account in
already
that
having an
bank? Yeah.
account.
Yeah.
So there's been a wide progression or change in the way accounts are opened or the overall structure. What are your thoughts about this?
See, as long as the banks have put all the controls in place, I think this is a pretty wonderful thing that has happened. You, the world is progressing ahead. The digitization has come in. The digital world is quite dynamic, and if you don't, and you have to catch up with it. The current generation, they don't have much time. They can't go through the same thing what I have done or what my parents had gone through. So during my time, opening a bank account used to take 2 to 3 weeks.
Yeah.
The forms were like 25 pages. You have to fill in each and every form, get the documents attested, go personally to a branch. As you said, you have to get it ratified by a person who's already having an account in
Yeah.
that bank. Neo banks, which you're addressing, like as I mentioned, 2 days back, I opened an account. I could open an account in 2 minutes, okay, and it's very fast. And within 15 minutes, I could transfer funds to the account which was opened just 2 minutes ago.
You get
So
the IBAN, everything.
everything, it's just prompt. I mean, I just had to take a screenshot and transfer the funds from that to that particular IBAN number which I had taken screenshot of. So, and the funds reach. So UAE is so fast these days. The digitization, that if it's below 50,000, your funds reach in less than a minute. I mean, you transfer funds from one account, and within 30 seconds you get an SMS from your payee bank account that the funds have been credited.
You get that notification, yeah.
So this neo bank, I mean, I'm completely for it. As I mentioned, if you do the conventional banking method where you go to the branches and fill up all the forms, the world is too fast and you cannot be that slow. You have to catch up with the world. You have to catch up with the youth. So I'm very much for it, but as long as all the controls are put in place. Now, because of the digitization, so your Emirates ID is already there with them, or if it's not there, if it's not an existing bank account that you have, you just hold the Emirates ID, you
Click a
scan
picture,
it, yeah.
yeah.
So I think the UAE Fed government has done pretty well as far as having sharing information. Uh, I think it's called open finance or something, whereby the data is shared across all banks. So it's pretty good. It's pretty good, yeah.
So if you see all over, neobanking has increased. Everyone's opening banks very quickly on their phone. It takes a couple of days, even less than that. Even I pass by on Sheikh Zayed Road, you see these massive signs, Sheikh Zayed, Al Khail Road, of these neobanks opening. With the emergence of these neobanks growing quite quickly, how do you compare the digitization and growth of banks in the GCC region versus another region, let's say in North America?
Frankly speaking, I do not have much idea about North America. Having talked about UAE, I think the digital first banking or the neo banks are pretty good. Um, the same bank, I'll just give an example of Mashreq Bank. So Mashreq
Mashfiq
Bank
Neo.
has the conventional old traditional banking, which might give 3.5% interest rate on your fixed deposit for an individual. But the neo banks is giving 5%. That's because there is no human intervention. The neo bank doesn't have a staff who has to be paid salary. Everything is digital. So the staff cost is less. So they can give that extra margin, extra interest on the neobank accounts. And obviously, they want to explore, they want to expand their retail business. So they're giving that extra interest to on these neobank accounts. I think in last 1 month there are 10 friends, 9 to 10 friends of mine who have opened account with this particular local bank. So you can see how attractive this is. First of all, because there is no documentation, there is no administration, there is no bureaucracy. The accounts are open within 5-10 minutes, and you're getting a very good interest rates. So that's really nice of the digitization in UAE. Uh, I'm talking about another country like India, where digitization is taking place, but that's pretty huge. That country is so huge, and but still, on the cities in the tier one and tier two, especially in the tier one cities, there is lot of digitization in India. So everything is done via smartphone, via mobile banking apps. But when I compare India and UAE, I think UAE has still gone far ahead as far as banking is concerned. The funds are remitted pretty fast. The opening of account is so swift that it's pretty easy for anyone to open an account, and there are good controls put in place. It is well regulated by the central bank of UAE, so you know that there is a regulator who is taking care of all these things and who is ensuring that the consumers are not scammed, or the consumers are given that comfort that there is proper controls put in place.
How much do you think, in terms of growth, is this going to increase, whether it's neobanks or digitization within the banking field?
I think the business is there to grow with the digitization and with the neo banks, and also now there's the same CBDC, which is the central bank digital currency. I think UAE is piloting it big time. There will be CBDC in the retail as well as the wholesale for the wholesale clients, and I think within few years we'll see that. I think UAE and Saudi are both trying really hard to have the digitization of the dirham, whereby the cross-border payments and everything will be done very fast. Things, so it will be as good as the real currency, but in the digital form. And central bank will ensure that there is proper funds earmarked to this, and it's as good as a physical cash.
So is it like, I'm trying to understand, what is the CB? Is it what, like a wallet where funds are stored? How does that operate?
It's a digitization of dirham. There is not much news out of it. It's not in the market. It's still in the pilot
Phase,
mode. Yeah.
yeah.
So, but what I read is that it is the digital form of dirham. So it will be used to do cross-border payments. Now, US and UK are still looking into it. I think their infrastructure is still not ready to have the digitization of their currency. But I think UAE and Saudi are really going big with it. And once that's done, considering there are so many expats living here and expats keep remitting funds outside UAE, I think the CBDC will be really, really good, and it will be very prompt. It'll be all through mobile banking or the smartphone banking or online banking. So you can actually see the currency how it is. There is an audit trail for that. You can see the funds going promptly from one country to another, and you don't have to wait for hours to see the funds on the other side of the border.
And I think with these kind of developments, business grows. Different countries can trade quite quickly. They don't have to wait. Remember, there was this time of, LC, letter of credit,
Yeah, yeah,
where if one party wanted to ship to another country, they had to go to their local bank,
yeah.
get the LC, and it's linked to a bank, usually in the US. Then the letter of credit, you give it to the other party that there's a guarantee. Then the shipment is done.
True.
Then when the goods reach, then the money is released from the main holding account, I think a mid account, to the customer. And that used to take weeks.
Weeks. Yeah, yeah.
And now everything you said within seconds or within minutes, everything's really changed
Yeah.
quite quickly for the better.
And if you don't catch up with this, what happens is the trades are moving faster. The bank in that local country, say it's coming from China, they are operating faster. If you don't catch up with it, then there's a loss of trade. The people will move to other banks who are willing to offer this product, the digital currency or uh, the mobile banking and all those things. So you have to catch up with that. Otherwise, you're out of the game. Yeah.
Okay. Satya, what money advice would you give to young professionals in the UAE?
Okay. For the young professionals, I would tell them that don't overspend. Okay, live within your means. UAE is quite dynamic. It's quite lucrative. It is so attractive. In UAE itself, you have people of different lifestyles. So you can, just for example, you can go to a restaurant where you can have your dinner with your partner for 50 dirhams, for 100 dirhams, for 200, for 500,000, 2,000, 3,000. There's different things. So I would advise all youth to live within your means. Put the habit of savings. It's very important because once you try to overspend, you try to catch up a lifestyle which is not part of your lifestyle. You'll end up in the vicious circle of debt, the credit card debts, and you'll just get stuck in it. So yeah, spend less, save more. The one advice I would really give is the moment you start your career, put 10% of it in a systematic investment planning,
In SIP.
SIP. That's really handy. It's an advice coming from a person who hadn't done it during his youth. So I started doing it few years ago, and I can see the benefit. So if someone had
Compounding.
started in 20s, I think by mid 40s he'll be a millionaire easily.
The
So
power of compounding.
compounding, yeah. So 10% of your salary doesn't pinch you much, but it's going for a greater good. Also, I would advise all the people who are starting their career initially to take a insurance, whether it's a term insurance or a whole life insurance. It really comes handy. And on a personal front, a non-financial front, please stay fit, go to gym, travel a lot. It really helps. It really helps.
I think it also gives a very different perspective when you see other cultures, when you travel to other countries. So we now spoke about the youth. Let's say someone is in their early 30s or 40s and they've done the basic set of financial. They have an emergency fund, which is 6 to 8 months of their income. They have money in fixed deposits and then SIP, mutual fund. They've taken a life insurance. They have personal health insurance as well. So they've done those basic fundamental areas in finance, but they want to grow their financial journey even more.
Okay.
What do you think they should do?
So people who have in their late 30s, 40s, they just have to ensure a few things that never put all your fruits in one basket. So you have to diversify your investments. So should have fixed deposits for sure, which will give you a guaranteed return. You have to invest in bonds, in debt markets. You have to invest in equities, have a systematic investment planning, invest in real estate. All this different variety of financial instruments basically when you're investing. So then that way you are mitigating all the risks. So if the stock market's coming down, there always be the debt market which will go up. So that kind of give you you are mitigating the risk of losing a lot of money. So yeah, this way you just have to diversify your funds.
So then when we look at the last, let's say somebody in their 50s or 60s, they worked their entire life, they're about to retire or they've reached a retirement phase, they have a good corpus of amount, but they still want to put a certain amount in investing or a pension that they get, for instance, if they're based abroad. How should their risk appetite be?
I tell you my personal thing. So every person has to set goals. So my goal is that by retirement age, I have a particular cash invested either in fixed deposit or in a bond investment, which will fetch me a regular revenue. Considering we are not working in our home country where you get pension if you're working in a government organization. So if you're not getting a pension, there is no regular stream of income coming. So my goal is that I should have a real estate which gives me a rental income. I should have fixed deposit which gives me interest income. I should have a debt investment which will give me 6 monthly coupon. So that way, if the government is not taking care of me because I didn't pay tax, I was not part of the government organization, I'm not part of that country. So at least there has to be a regular stream of income coming to me, which I can take care of me, my family, and my health. So I would advise if anyone is working in their 30s, 40s, or especially in 40s, and if 60 is a retirement, they should ensure that there's a regular stream of income coming in from different investment sources.
Many people have this thinking that they should park the majority of their funds in an FD. You hear that FD will give this particular interest rate and they will live their life or their means based on the interest of that. Then you have another school of thought saying that because inflation is so high,
Yeah.
inflation essentially eats up the interest that you earn in FDs. So what do you think is your personal view on this, and what is an approach that you think that people should follow?
I completely agree with this view that you cannot keep your entire funds in fixed deposit because even if you keep in fixed deposit at your retirement, it will not match the inflation rate. That's point one. There is a tax factor which comes in. So if I'm talking about my home country, there's a
TDS.
33%, yeah, 33% tax which is deducted from your interest income. So if you're getting a 7% interest and supposedly, and if there's a 33% tax deducted, so what you're getting is barely 4.5%. That is not going to take care of you. The inflation is so high. So that 4.5% net of tax interest income will not take care of your expenses. So therefore, you should ensure that some part of your investment is invested in equity, where there is a regular there's a growth which is much higher than the inflation. And as I said, there is different revenue sources where you get. And along with systematic investment planning, there is something called systematic withdrawal planning. So you can use that. I don't have much of an idea. Perhaps I'll have to do study of it when I am at that age of my retirement where I do the withdrawal. But you have to have a systematic withdrawal plan which will take care of inflation, which will also take care of all your regular expenses, and still the corpus will be intact. It will not be reduced.
In an industry that keeps on changing with a lot of regulations, innovations, how do you stay sharp and stay ahead of your career?
I think you have to regularly keep yourself abreast with all the latest things that are happening, and especially your profession. That way, you know what's happening in your profession, you know what's happening in your industry. So for me, as long as whatever IFRS guidelines or the IFRS updates are there, I have to be abreast with that. Whatever industry dynamics are changing in the banking, I have to be up to date with that. So you have to educate yourself regularly. You have to talk to your peers. You have to talk to your seniors and understand what they know. uh, do some training when you're talking to your peers, your colleagues, or your subordinates. Teaching them also will educate you. Attend seminars. That's really handy. All the big four firms regularly keep seminars and events. Networking is really good, and especially in UAE. um, Relationship creates opportunities, and GCC is a perfect place where the networking always will take care of your friends and your career and everything, because in UAE networking is a quite important thing I've realized in my 20 years of career.
Satya, if you looked at someone who just graduated from college and they're starting out their banking and finance career, and they had two options with them: to work with a well established bank that has been there for decades, for hundreds of years, or a smaller kind of startup bank with growing potential, which option would you choose?
I would advise that particular person to go for a traditional bank, or basically a bank which is already set up. Because if you're a clean slate, you should not join a startup company because you know nothing. And joining a startup company would require a lot of knowledge, a lot of history, how the processes work. So I would still advise that a person has to has to work in a startup too, because that's really great experience. You learn a lot and you'll grow with the company. But a person who is starting his career cannot straight away go to a startup company because he knows nothing, and he can't give anything to that company. So better work for a few years in a well set up bank, or even a not a great foreign bank or well established bank, but even a bank which has a history of 5 to 10 years. That's fine. You work in that, but do think that I think they should work in a startup company to make themselves grow and learn a lot about how the banking or any organization works, because startup company teaches you a lot.
Satya, this has been a very insightful conversation. Thank you for being on the
Pleasure
podcast.
is mine. Thanks a lot.